Hello learners, my name is Amit Kumar and today we shall discuss income under the head of profit and gains of business and profession. As you know, there are 5 heads of income. First one is income under the head of salary. Second one is income under the head of house property. Third one is income under the head of profit and gains of business and profession. Fourth one is income under the head of capital gain. And final is income under the head of other sources. So this is your third head of income, profit and gains of business and profession. So profit and gains of business or profession, it is also known as PGBP, is third head of income other than 4 heads of income, namely salary, house property, capital gain and other sources. So in this head, income earned from carrying on any business or profession shall be taxable. So if you are doing any business or you are doing any type of profession, income earned from that type of business or profession shall be taxable under this head of income. Now we shall discuss what is the meaning of business and profession. So business is defined under section 2 subsection 13 of Income Tax Act 1961. So as per section 2 subsection 13 of Income Tax Act, business includes any trade, commerce or manufacture or any adventure or concern in the nature of trade, commerce or manufacture. So if you are doing any type of business activity called, if you are manufacturing some type of article, if you are trading some type of goods or you are providing any type of services, then income earned from these sources shall be taxable under the head of PGBP and it is defined under section 2 subsection 13 of Income Tax Act. Next section is section 2 subsection 36. In section 2 subsection 36, profession is defined. So profession includes an occupation requiring intellectual skill or manual skill on the basis of some special learning or qualification. So to be a professional, you need to acquire some special knowledge. After that, you will become a profession. So profession also includes vocation. So what do you mean by vocation? We shall now discuss. The vocation refers to any activity done to earn the livelihood. For example, agency work, story or play writer, brokerage, magic activities, robbery, music, dance, etc. So there is difference between a professional activity and vocational activity. So for a professional activity, you will have to acquire a professional degree. For example, if you want to become a chartered accountant, then you will have to clear the exams conducted by the Institute of Chartered Accountants of India, and after that you will become the member of the institute. If you want to become a lawyer, then you will have to acquire a degree of LLB. But in case of vocational activity, you don't need to clear any type of exam. You will have to develop some skills in yourself. After that, you will become a vocational. And in vocational, for example, in vocational activity, you can say that actors and sports person also come under this vocational activity. So this is defined in section 2 subsection 36. Next we have charging section. So charging section define what are the incomes which shall be taxable under this head. So section 28 is the charging section for PGBP income. So as per section 28, the following income shall be chargeable to income tax under this head, and income will be computed in accordance with the provisions laid down in section 29 to section 44D. So please remember, income shall be taxable, income shall be calculated as per the provisions of section 29 to section 44D. Now we shall discuss the points which is defined under section 28. So first point, profits or gains of any business or profession. So in this head, we will be taxing the income which is earned from any type of business or profession, whether business is a legal business or illegal business. So if you are if someone is earning income by smuggling some article, then also income shall be chargeable under this head of income. Or you are doing some illegal profession, then also your income shall be taxable under this head. Second point, any compensation or other payments due to or received by any person specified in section 28 clause 2. Third income which shall be included, income derived by a trade, professional or similar association from specific services performed for its members. Fourth, any profit on the transfer of the duty entitlement pass book scheme. So any profit on the transfer of the duty entitlement pass book scheme shall be taxable under this head of income as per section 28. Fifth point, any profit on the transfer of the duty-free replenishment certificate shall be taxable under section 28. And sixth point, export incentives for exporters will also be taxable in this head of income. Seventh, any interest, salary, bonus, commission or remuneration received by partner from a firm. So, if a partner has received any type of interest, salary, bonus, commission or remuneration received from a partnership firm shall be taxable under this head of income. So, salary received by partner shall be taxable in PGBP, not in salary, not in under the head of salary. Now come to the 8th point. Any sum received under key man insurance policy including bonus shall also be taxable under this head of income. For example, if a film star is doing a game show and the channel has taken the insurance policy for that film star, then any sum received by from channel shall be taxable under this head of income. 9th point, any sum received for not carrying out any activity in relation to any business or profession or not to share any know-how, patent, copyright, trademark, etc. shall be taxable under this head of income. 10th point, any sum received or receivable in cash or in kind on account of any capital asset other than land or building or financial instrument being demolished, destroyed, discarded or transferred if the whole of expenditure on such capital asset has been allowed as a deduction under section 35 AD. Last point, income from speculative transaction shall also be taxable under this head of income. So, these are the income which are taxable under PGBP, and this is known as charging section, section 28. Now, we shall discuss some general principles for calculating business and professional income. So, first is profit and gains from business or profession should be there. So, there must be some profit and gains from business and profession, then only we can tax the income under this head. Second, business or profession to be carried on by the SSE. So, business or profession must be carried on by the SSE. If SSE is not carrying on such business or profession, then income shall not be taxable under this head of income. Next, business or profession should be carried on for some time during the previous year. So, it is not necessary that business or profession should be carried on for the whole year, for the whole previous year. If business or profession is carried on for some part of the previous year, then also income shall be taxable under this head of income. Next, charge should be in respect of the previous year, and then charge extends to any business or profession carried on. So, it does not matter what type of business or profession is being carried on, income shall be taxable under this head of income. Now, we shall discuss some businesses which is not carried on by the SSE, still taxable as income from business. So, first section is section 41 subsection 1, recovery against any loss, expenditure or trading liability earlier allowed as deduction. Next, section 41 subsection 2, balancing charge in case of electricity companies. Section 41 subsection 3, sale of capital asset used for scientific research. Next, section 41 subsection 4, recovery against bad debts. Next, section 41 subsection 4A, amount withdrawn from special reserve. Next, section 176 subsection 3 capital A and subsection 4, receipt of discontinued business under cash system of accounting. So, these are the income from business not carried on by the SSE, still taxable as income from business. For example, let us say first section, section 41 subsection 1. So, if you have recovered against any loss, expenditure or trading liability which were earlier allowed as deduction, but you have incurred in the current previous year, then that income shall be taxable under the head of PGBP, despite the fact that business is not carried on. Next, we have business loss. So, a trading loss is deductible in computing the profit earned by the business if the following conditions are satisfied. First, real loss, not notional. The loss must be real for claiming deduction. Next, loss on revenue account, not capital account. Next, actually it is arisen and been incurred, not mere anticipation. Incidental to business, and last one is no prohibition in the act against deductibility of such loss. So these are the loss which is deductible in computing the profit earned by the business if the following conditions are satisfied. Next, we have cases where income from business is not taxable under profit and gains of business or profession, but they have nature of business income. So there are some business or profession income which is not taxable under this head, but they can be said that they have some nature or characteristic of business income. So first is rent from house property. Income from business of owning and letting out of residential houses is taxable under the head of income from house property. If there is a person and who has a business of letting out of house property on rent, then income shall be taxable under the head of house property, not under the head of PGBP. Next point, residential house let out to the employees for efficient conduct of SSE own business is taxable as business income. So if a businessman has given some house to his or her employees for residential purpose and he has recovered some rent from them, then it shall be taxable under the head of PGBP income. So which income shall be taxable under the head of house property? If one has business of letting out of property and he or she is earning rental income, then it shall be taxable under the head of house property. Next is dividend income. So dividend income shall always be taxable under the head of other sources. So an SSE carrying on business in dealing in shares and securities and earning income by way of dividend is taxable under the head of other sources. Next, winning from lotteries, races, etc. So winning from lotteries, races, etc. is taxable under head income from other sources if it is derived as a regular business activity. Next, interest received on compensation or enhanced compensation. So if someone has earned some interest which is received on compensation or enhanced compensation, then it shall be taxable under the head of other sources. So suppose there is a person called Mr. X and he has a shop and he is earning some income from this shop. He is doing some business activity in that shop, selling some article, and the government is constructing metro line from that area, and his shop is acquired by the government. Now the government will pay compensation to Mr. X, and compensation is not given on time. Government has given interest also, then that interest shall be taxable under the head of other sources. Suppose Mr. X has filed a case in the court and he has won the case to increase the compensation. The interest received on that increased compensation shall also be taxable under the head of other sources. Now we shall discuss the method of computing income from business or profession. The method of computation of income from business or profession is defined under section 29. Section 29 states that profits and gains of business and profession which are chargeable to income tax under section 28 shall be computed in accordance with the provisions contained in section 30 to section 44D. So there are some general principles for allowing deduction. So for allowing deduction means what are the expenses which can be debited to profit and loss account while calculating the income. So general principles are as follows. Point A, expenditure should have been incurred during the previous year. Point B, expenditure should be incurred for the purpose of the business. Point C, expenditure done before in respect of setting up of business is not allowed. Point D, no expenses in respect of discontinued business is allowed to be deducted. Point E, reserves / provisions for contingencies / anticipated losses cannot be claimed as a deduction. Point F, no deduction is admissible in respect of diminution or exhaustion of the capital asset from which income is derived. Point G, no deduction is allowed in respect of non-taxable business like agricultural income in India is exempt. Point H, no deduction is allowed in respect of depreciation of investment. Method of accounting. So, method of accounting is defined under section 145. So, income shall be calculated either on the basis of cash or accrual system of accounting as followed or employed regularly by the SSE. So, SSE has a choice. He can calculate books of account on cash basis or accrual basis, but he will have to employ that choice regularly. Point B, central government is empowered to notify income computation and disclosure standards. And point C, assessing officer empowered to make assessment in the manner provided in section 144 in certain special cases. Next, we have method of accounting in certain special cases, which is defined under section 145 capital A. So, to calculate the income under the head of profit and gains of business or profession, some valuation rules are defined under section 145 capital A, which are as follows. Point 1, the valuation of inventory shall be done on the basis of lower of actual cost or net realizable value calculated according to the method defined in ICDS, means income disclosure and tax accounting standards. Point 2, the valuation of purchase and sale of goods or services and of inventory shall be calculated after including the amount of any tax, duty, cess or fee actually paid or incurred. Point 3, the inventory which is not listed on recognized stock exchange or listed but not quoted shall be valued at actual cost initially recognized in the manner provided in ICDS. Point 4, inventory being the securities which is held by scheduled bank or financial institution shall be valued in accordance with ICDS, income disclosure and tax accounting standards. Next, we shall discuss some deduction. So, now onwards we shall discuss what are the deductions which are available. So, deduction means what are the expenses which are allowed to be debited to profit and loss account. So, deduction for rent, rates, taxes, repair and insurance for buildings, it is defined under section 30. So, first is rent and repairs. So, rent and repairs of building is deductible. So, if you have taken a shop, a building on rent and you are paying some type of rent and you are incurring some repair to that building, then it shall be allowed to be debited to profit and loss account. So, rent and repairs of building is deductible. Next, allowed only if SSE has occupied the property as a tenant. So, if the businessman who has taken the building on rent and he is a tenant, then only the rent and repairs will be debited to the profit and loss account. Expenditure is not of capital nature. So, repairs must be of revenue nature. If repair is incurred which is of capital nature, then it will not be debited to the profit and loss account. So, if you have constructed one more room in that building, then that repair is of capital nature, it will not be debited to the profit and loss account. Next, we have municipal taxes oblique land revenue oblique other taxes. So, taxes are deductible subject to the provisions of section 43 capital M. That means payment should be made actually during the previous year or till the due date of submission of return of income. So, if you have taken the building on rent and you are paying municipal taxes, then these municipal taxes are allowed to be debited to the profit and loss account. So, taxes are deductible subject to the provisions of section 43 capital B. The provision of section 43 capital B we shall discuss in coming sessions. It is a detailed section and important section. We shall discuss it in the session 3 or 4. So, if you have paid municipal taxes, then they are allowed to be debited to the profit and loss account if the conditions of section 43 capital B is satisfied. Next is insurance. So, insurance against risk of damage or destruction of the building is deductible. So, let us understand this point. if you have taken the building on rent and you have taken insurance for any damage and you are paying insurance premium, that insurance premium is allowed to debited to the profit and loss account as per section 30. So these are the detail regarding rent, rates, taxes, repair, insurance for building. Now suppose you have purchased the building and you are doing your business in that building, then depreciation shall be allowed to debited in the profit and loss account under section 32, and depreciation we shall discuss in the next session. Next we have repair and insurance of machinery, plant and furniture, which is defined under section 31. If you have taken any type of machinery, plant or furniture on rent and you are paying rent and you are incurring some expenditure on repairs and maintenance of that machinery, plant or furniture, then it shall be allowed to debited to the profit and loss account. So deduction means it is allowed to be debited to profit and loss account. So rent and repairs of machinery, plant and furniture for business purpose is deductible. And next point, expenditure is not of capital nature. So expenditure should not be of capital nature, only revenue nature expenditure will be debited to the profit and loss account. So these are the two expenditure which is related to repairs and insurance of machinery, plant and furniture, which is defined under section 31, and earlier one was expenditure in relation to rent, rates, taxes and insurance of building. So this is all for this session.